So there's $300 sitting in a Roth IRA. Tomorrow morning, Monday, June 1st, I'm placing 3 orders. J&J, Coke, and Realty Income, $100 into each. The whole account's going to be public from day one. Every payout tracked, every position open, even the mistakes I'm going to make along the way, all of it on the record. This is week 1. Quick disclaimer before we get into it. This isn't investment advice and it's not tax advice for your situation. Talk to a qualified accountant or financial advisor who actually knows you. The 3 stocks I'm walking through today are what I'm buying with my own money on Monday morning. That's not a recommendation for you to do the same. I should say this up front, I've done this before. I've had a portfolio for a few years, made the mistakes you'd expect, lost money I probably shouldn't have lost. So this is the version of the portfolio I should have started with on day 1. Same money going in. Real rules this time. Every stock I pick pays a dividend, that's the whole filter. The company pays me for owning the shares. No extra work, no trading. The income is passive. Reinvest each payout and the next one's bigger. Like a snowball, it starts small, but it keeps growing. The way I make sure I'm not betting on the wrong stock is a 4-rule test I run before I buy. The full test gets its own episode. The headline: all 3 of these pass all 4 rules. Let me show you what that looks like. Start with the boring one. Johnson & Johnson, ticker J&J on the New York Stock Exchange. You already know what they make. Tylenol, Band-Aid, Listerine, the prescription drugs, the medical devices, one of the largest healthcare companies in the world. It trades around $225 a share, yields about 2.4%. The number that really matters is the streak. 62 consecutive years of raising the dividend. Look at it on the bar. This is the cover gauge. It's going to show up on every stock I cover going forward, so worth getting familiar with now. What it measures is Rule 2 of the framework. Basically, how much earnings does a company have covering each dollar of dividend they pay out? That tells you how much cushion the dividend has if a bad quarter comes along. J&J comes in at 2.5 times. Comfortable margin, well inside the green zone. For now, just know this one passes cleanly. The streak bar is Rule 1 of the framework. Each segment is 1 year of a consecutive raise. The vertical threshold line at year 10 is the minimum the rule asks for. J&J has raised every single year since 1963. Through Vietnam, through stagflation, through the dot-com crash, 2008 COVID, 62 segments wide. Honestly, at that length, it's not really a streak anymore. It's a discipline the company has built into how it operates. This is J&J's actual dividend history pulled straight from Digran.com. Every quarterly payment going back to 1962. No cuts anywhere on the chart. That's exactly the pattern the framework is filtering for. Last piece, the receipt. It's the closing card for every stock I'll ever cover on this channel. Every position that ends up in this portfolio gets one of these as a summary. 4 rules, 1 verdict per rule, printed on the same kind of receipt every Sunday. This one's J&J's, and it comes back with 4 passes. The quarterly dividend is currently $1.34 per share. On my $100 of J&J, about 4/10 of a share at this price, I should see roughly 60 cents arriving in early September, almost nothing in absolute terms, honestly. But it's the first quarterly dividend of the entire journey, and it lands from the most disciplined dividend stock on the planet. There is one overhang on J&J that I keep an eye on: the ongoing talc litigation. Too much to unpack in a launch video, but it's firmly on my radar. $100 spoken for. Quick one before we move on. If you're doing something similar yourself, or you just want to follow a real portfolio built in public, 1 position at a time, hit subscribe and come along for the ride. Now, stock number 2, Coca-Cola, ticker Coke, the Atlanta company that needs no introduction. About 200 brands sold in basically every country on Earth. Trades around $79 a share, yields about 2.7%. 62 consecutive years of raising the dividend. Same streak length as J&J, completely different kind of business underneath. And here's the part that makes Coke genuinely special. Cover ratio for Coke comes in at 2 times. Earnings are twice the dividend, comfortably inside the green zone. Easy pass on Rule 2. Streak length on Coke is 62 years, same as J&J. But here's what makes Coke's streak different from basically anyone else's. Warren Buffett bought $1.3 billion of Coke back in 1988. Today, that exact same position is worth around $25 billion. The dividends he collects on it every year run about $700 million. And he's never sold a single share. 37 years of holding. If the most disciplined buyer in market history hasn't trimmed Coke once in nearly 4 decades, that's a level of conviction worth paying attention to. Coke's dividend history pulled from the same source. Same overall picture as J&J. Every quarter showing up, every year a raise, no cuts anywhere on the chart. Coke's receipt, 4 passes across the board. The current quarterly dividend is 53 cents per share. On my $100 of Coke, about 1.25 shares at today's price, I should see about 67 cents arriving in early October. Same story as J&J on the dollar amount. Small first payment, much bigger underlying pattern. $200 spoken for. Last in the trio, Realty Income, ticker O. This one's pretty different from the first two, and that difference is exactly why it's in the portfolio. Realty Income is a real estate investment trust, a REIT, which basically means it owns physical commercial real estate and collects rent from the businesses operating out of it. Dollar General, Walgreens, 7-Eleven. About 15,000 properties spread across the US and Europe. Trades around $61 a share, yields about 5.3%. And here's what really sets it apart from J&J and Coke. Realty Income pays its dividend every single month, not every quarter. Cover ratio first, and there's a small wrinkle here. For REITs, we actually measure against funds from operations, not regular earnings. Their accounting treats real estate depreciation differently than a normal company's. REITs also structurally run tighter on cover than a J&J or a Coke. By law, they have to pay out at least 90% of taxable income as dividends, so there's less margin sitting on the books to begin with. O sits at 1.6 times FFO cover, for a REIT that's comfortably inside the green zone. Still a pass on Rule 2. Streak length on O is 30 consecutive years of annual dividend raises. Clears Rule 1 easily. But the number that really makes O special is a different one. 634 consecutive monthly dividend payments. 52 years worth, every single month on schedule. Paid through 2008, through COVID, through the regional bank crisis in 2023. Realty Income calls itself the monthly dividend company. And looking at that track record, the name absolutely backs it up. O's history pulled from the same source as the others. You can literally count the payments here. Every single month for the last 50-plus years is a row on the table. O's receipt, 4 passes across the board. The current monthly dividend is about 27 cents per share. On my $100 of O, about 1 2/3 shares at the current price, I should see roughly 44 cents arriving around July 14th. That payment right there is the channel's first ever cash flow event. Then it lands again in August, then September, and every month after that for as long as I hold it. The whole reason O is in position 3 is that exact fact. The very first dividend of this entire journey comes from this position. $300 spoken for. Meet the ledger. It's where every contribution, every payout, and every position gets tracked together on one page. A fresh version of this lands at the end of every month on this channel, so the whole portfolio's progress is visible in one place. Today's page shows tomorrow's 3 buys at the top. $300 invested, 0 dividends collected so far because we haven't started yet. The first one, 44 cents from Realty Income, arrives around July 14th, roughly 2 weeks before the next monthly contribution lands. That's the exact moment the snowball actually starts rolling. So that's it for today. If you're doing something similar yourself, building a dividend portfolio one position at a time, hit subscribe, and let's go on this together. The whole journey from here is going to be public. Every position and every payout. First dividend lands in about 6 weeks. Until then, happy investing.